Howdy, welcome back to Dion Talk. The purpose of my content is to help the average individual reach financial freedom in 10 years or less, even if you're not starting from the best position. And when I produce videos or when I produce content, I talk about the real estate X factor. There are these two lines that the further you go up the risk line, the more money you're going to make. And the further you go up the amount of work that you do, the more money you're going to make. And I break it down with, at the top of the work is self-managing short-term rentals, having a property manager for short-term, self-managing long-term, property management for long-term, syndications, and then REITs. And what I'd like to do is talk about syndications today with my friends Micheal Zuber from One Rental at a Time and Matt the Lumberjack Landlord, and have the three of us collectively talk about why we haven't invested in syndications. So let's start with Mike. You've been investing for about 20 years, coming up on a couple hundred units if you haven't broke the 200 mark yet. Mm-hmm. What are the concerns you see with syndications?
Wow. I mean, I probably can go for an hour on my concerns for syndications. Let's just start with the deal first. Right? Because again, there are so many variables in there. So you have to be an accredited investor most of the time, right? So again, you have to get on the list, prove you're an accredited investor. So I see these weekly now. I've been one for about a decade or so. You have to trust, because you just, as a person with the money, the person that's going to write the check, you're called an LP, right? Limited partner. And basically you're the bank, you're the equity. So there's a couple of things. First and foremost, you have to, the deal, right? The house, the apartment, the office, the storage, whatever it is. You have to understand that. You have to understand the market, where most syndications are all over the country. It's hard to do. And then the biggest bugaboo is you have to evaluate the general partners. And there's usually a couple, and some of them are silent. It's just so many layers of risk for me. I will never invest in a syndication. I will never do a syndication either, because I like I borrow private money, but it's one asset, one person, one asset, one person. So if I go bust, they take the asset, all good. There's so many things in a syndication. First, as an LP, you are one of dozens or hundreds or thousands of people. If what happens, what I think is going to happen, you're going to have a point where you could buy out other LPs for a discount. So your position is less valuable. How does that happen? Well, there's 10 of you. You all put up $1 million. 3 years from now, the interest rates change, cap rates change, the value of the building went down. You have to stroke a check for $200,000 collectively. Well, I can't do it because I got divorced and this, that, the other thing, but you can buy me out. There's just, the money gets really chaotic really quickly. Anything that's the final thing I'll say here, because again, I could keep going, is anytime somebody promises easy, passive, like truly mailbox money, should freak you out. If that's what they're positioning to you, there's something not being told. So yes, I know syndications work. Yes, I interview 2 people on my channel every week that do syndications. I mean, they can be done right, but in general, I think there's a lot of people that are going to lose a lot of money in the next 3 to 4 years. I think a lot of you have already lost money. You don't even know it yet.
And Matt, you are over 100 units now. You've been investing for 20 years. Mm-hmm. I'm curious, are you seeing syndication offers? And when they come in, what are the things that make you think, no way?
A lot of things. I have no control. I think that they're, in all likelihood, they're buying compressed cap rates now, and that it's not if you're going to have to stroke a check when that money renews or when that rate changes. It's not if, it's when. And then 3, how much? So there's nothing I like about that. I wouldn't invest in them myself. For me, I want to be an active investor. Number 1. Number 2 is I don't like the returns on them. I think the returns on them are skinny now, and I think they're only going to get skinnier. So I don't like the return on them. Number 3 is I can't get out of that in any real way. And a lot of times you're locked in. That's the way it goes. And the only way to get out is if you sell off at some sort of a discount. So you're basically signing up to take a loss. So for me, no syndications. I've been asked to do syndications just based on the numbers that people see in our spreadsheets. Like, have you ever thought about a syndication? I was like, yes. They're like, oh, what are your thoughts? Never.
Yeah.
Not for me, not something I want to do, not something I feel safe doing. I have no problem. I like Mike's take on that a lot, which is I have no problem putting my money at risk. I have some problem putting another person's money at risk. I have an enormous amount of problems putting a lot of other people's money at risk. It just doesn't make me feel good. It would keep me up at night. And I think that's what makes me a good investor doing what I do, is that I take that very seriously. I look at the numbers. That also is what probably would make me a good syndicator. Still hard pass, not interested. So I just think there's too many variables in that I have no control over where they are going to be dictating to me the terms. And there's a lot of deals that those syndicators do that I wouldn't do even if I had that money, because the rate of return was so bad or so average or below average. And I know that rates years from now are only going up. In my eyes, they're only going up. Certainly over the next 3 or 5 years, they're going up. And those big, massive, huge syndicated projects, I think there's going to be some comeuppance there.
Let's just hit one more thing. I'll turn it back to you, Dion. Some of you need to realize that these syndicators, they don't have any skin in the game, and they're making their money up front. They're getting paid to find the deal. They're getting paid to asset manage. They're getting paid for this. They're getting paid for that. They're getting 40% or 20% of the upside at some hurdle rate. There are companies now that their job is to do syndications, and they're doing skinny or what I'll call bad deals now because they have employees and they got to pay the head count. That is the wrong time to do deals. When you have to do deals to make payroll, that is bad. And if you have to take bridge debt, you have to take debt like Dave Ramsey blew up or like the '08 crash blew up in singles. It's not going to, the party's over. We just got a bunch of drunks in the room and the hangover's coming, and I don't want to be a part of it.
Like you, Zuber, you have two experts who come on who have done syndications. I personally know people who have successfully invested in syndications, and they're doing really well. So someday I may do a syndication investment.
But not today.
And here's why. First, let's explain what an accredited investor is. You have to have an annual income of $250,000 or a net worth of $1 million to be on the list for people to offer you syndication deals. Because it's so risky, that protection is in place so that the mom and pop investor who has saved up $50,000 over the last 5 years of their life doesn't put it to risk in something where they can lose it all. Some of the syndications that I'm seeing, because once I started producing content, I got on several lists as, hey, that guy is an accredited investor. Look, he showed a net worth video, so let's start sending him deals. I'll see things like you have a return of 7%. So the cash on cash return is going to be 7%. So that, okay, I'm not doing any work, right? So I do a lot of work to get my 10%, which then grows to 20 now, but 7%. Okay, so I'll look. The GP is getting 30% of your 7%. So that drops you to 4%. I don't know how to do math, but it lowers your return significantly.
4.9% is what it takes you to do.
They're also going to get a percentage at the point of sale. When you're looking at that internal rate of return that their prospectus shows, which this is the biggest fear that I have. We had really good rent increases in the last 2 years. We've seen them skyrocket. Like I just did the binder method on the end of January 2022. And the tenant requested a 28% rent increase and then thanked me when we were done and was happy because her deal was still below area average because rents have skyrocketed so much that a 28% increase was a deal for her. So they're projecting continued rent increases over the next several years, saying an exit strategy in 3 to 5 years, hoping that rents have gone up enough for that NOI to be enough so that they can sell, or if they have to, refinance. If the NOI is not there and rates, like Matt said, again, if somebody write this down, Matt was right. Rates are going to go up over the next 3 to 5 years, right? There's not a lot of down left for them to do. There is going to be a lot of pain in syndications going forward. And that doesn't mean that people aren't successfully investing in syndications. It's going to take somebody who takes the time to learn the asset class, our strategy of, well, Mike Zuber's strategy of one rental at a time that we are all using, we took the time to learn the basics. We took the time to learn how to calculate yield, how to calculate rents, how to find your property manager, how to self-manage, how house hacking fit. All the things that we've taken years to learn to make this successful. If somebody's going to invest in a syndication, it should not be somebody who's saved up some money and thinks that, like Mike said, that is an easy way to get my return. Those are my thoughts. After you see how I look at it, Mike, can you see any holes in my theories?
No, I just want to go back to what we all three of us preach. Financial freedom is out there. You can make work optional in 10 years. Do the goddamn work. Don't stroke a check to somebody else because they have a reputation or 50,000 Instagram followers. That is stupidity and laziness. Do the work yourself. Figure it out. Learn the market. It's 20 minutes a day. You can do it. I have more faith in you than maybe you have in yourself. Do the work.
And Matt, any final thoughts?
It's just math. It's just math. It really is. It's just math. I look at it and say, I'll take the ownership of the solution. I'll take the ownership of the problem, but then I take the ownership of the return on my capital for solving said problem with my said solution. Mm-hmm. Not interested in paying somebody else to figure that out. And there's one person that keeps on posting in, I think, both groups, that woman that's part of like 7 or 9 syndications. I can't wait to see where she's at 5 years from now. I'm not rooting for her to fail, but I can't wait to see where she's at 5 years from now, because I'd be willing to bet you if she's in 9, probably 5 out of the 9 or 6 out of the 9, she's going to have stroked an extra check to.
But here's why I think she has an okay strategy. I don't have a problem with what she's doing. Mm-hmm. In one of the videos that we put on One Rental at a Time last week, because this comes out on Sunday, we talked about not comparing year 10 or year 6 to year 1. If you're just starting out and you've saved up money and you invest in a syndication and that's your investment in 3 to 5 years, if you have to cut a check, where's it going to come from? But my friend who invests in, she does storage facility syndications, but she has a huge portfolio in several different asset classes and has a good cash flow to support the mistakes that could happen with the syndications she's invested in. So our person who talks in the comments, who is in several different syndications, I don't know that that's her only investing. She probably has other investing, other assets that are producing cash flow to support that. So if you see somebody saying, I invest in syndications and this was my return last year, look at the whole picture. What else do they have going on that supported the ability to do that and take that risk? Awesome. I want to thank you both for coming on here and sharing your thoughts, because I know somebody's going to hit us in the comments with how they've made money with syndications, but thousands of people are not going to hit us in the comments because they're not in real estate anymore because they tried syndications and lost everything.
Yep.
Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.